GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, natural resource analyst at UncommonWisdomDaily.com. Welcome back to the show, Sean.
Thanks for having me on.
Gold. I've talked to a few people who expect it to at least spike about another $100 or so. What's your read on it?
Well, it's actually looking pretty good here, and I say that as gold is up a big monthly downtrend that has been in place for more than 5 years. I mean, it's just been a long, grinding downtrend, and that's why we're seeing a lot of frankly. That's why we're seeing a lot of selling, frankly, is because a lot of people looking at this chart are saying, you know what, every time gold has come up against this downtrend, it just hasn't worked out. But if you look at the fundamentals for gold, they're actually quite good, and downtrends are made to be broken. I think this is the time when gold goes higher. I mean, it has all the normal stuff, peak gold and some other stuff that hopefully we can get to during this broadcast, which we spoke about ahead of time. And that and the fact we're seeing the Asian markets wake up again, geopolitical worries, which are always short-term, I know, but it seems like the thing with North Korea is only getting worse, not better. And then you have rising inflation around the world. There's a whole bunch of things that are actually bullish for gold. And so I expect that that we could see some zigzagging here, but if you have long-term positions, you don't want to get shaken out now. Not when gold might be making the best breakout it's had in quite some time. So, I did take some profits yesterday in my own personal account, but only a small piece of my positions, just because, I don't want to be the guy who sells everything and then watches everything go higher. I really think things look good for gold in the intermediate term. In the short term, we are going to see a heck of a lot of zigzags, especially because it's up against that big downtrend. But those downtrends are made to be broken.
Is one of the problems people have is, as Carrie Fisher said, the problem with instant gratification is it takes too long?
Yeah. Well, it's been a long, hard slog for the gold miners. I mean, they had a bear market that was nearly 5 years long. It finally turned around at the beginning of last year. And things went up, and then we hit the downtrend again, and things came down. And I think that maybe people will go chasing higher returns somewhere else, maybe in tech, energy. I mean, things look good in energy, surprising the heck out of me, I must say. But oil prices look good, at least in the short term, because we are starting to see all the floating storage, all the oil that they had in like oil tankers floating at sea forever and ever. That seems to be draining out. The folks at OPEC have made their supply cuts stick, and they're talking about extending those supply cuts. The question for oil, and let's just speak about that because it seems like a natural transition, is how fast can North America, the U.S. and Canada, ramp up to meet global demand? Because that's what we're seeing now. We're seeing North American oil producers start to ramp up because they're in a good spot. They don't have any restrictions on how much they can produce, and they can make money at current levels. And so I think that there's a real opportunity there. I'm starting to move into this area on like pullbacks. I just pick up the stock here or there because I think oil could have a good year. Now, at some point, we will see too much production come online, and that will start the whole cycle all over again, right? Then we'll see oil prices start to tumble down and stuff, but that could take quite a while. as long as OPEC is willing to enforce production cuts, things could look quite good in that area.
Well, I've heard that while in North America car sales are slowing down, in Asia they're still booming.
Yeah, I mean, and they're not all electric cars, which is many people worry that electric cars will be moving in and really eating up the demand for internal combustion vehicles. That's not the case. Electric cars are still a very small slice of the market. They can talk about phenomenal growth, but they start from such a low baseline that there's still not a lot of them. Down the road, it'll be a problem. I mean, but I wouldn't worry about it right now. Right now, I think things look very good for that whole area.
And also, too, where are they going to get the power to fuel these electric cars? Natural gas? Are they going to have oil-burning plants? Are they going to fire up more coal? Where's the power going to come from?
Well, that really depends on a case-by-case basis. I mean, certainly in places like China, they're going full bore to move away from coal. They'll probably still build more coal plants. That's the crazy thing about it. But they'll shut down the worst offenders of just making their air too thick to breathe. And, of course, we see places like Europe and stuff like that really want to run all on solar. The prices have really come way, way down due to the Asian manufacturers. And so that is something, but it's a long transition period. I'm sure far in the future, after this is all said and done, they'll look back and say there was a sudden transition from oil and coal and stuff like that to like solar. But living through it, it's going to take much, much longer for us. And you'd be hard-pressed to find a solar company that's a good investment right now. That could change later, but right now, there's just too much supply of what they produce, so the prices keep going lower and lower. So it's a very interesting market, what's going on. I'm still not sold on like nuclear. I have my friends in the nuclear industry bombard me every month, or sometimes every week, with things on how things are looking so good for them and like stuff like that. But really, when you look at what's going on there, I mean, they had a nice run into middle of like February, and then it's just been a compression ever since. I mean, we really need to see some put up or shut up from that group. And and the problem with nuclear power, it just takes one bad incident to cast a pall over the entire industry. So, I'm sticking with my bets, which is, I like oil, I like gas. I think, natural gas, a lot of people have started to sour on it recently, but North American natural gas exports are really starting to ramp up now. And that means that prices could hit $3.40 before they see $3 again. Even though they're much closer to $3, it could hit $3.40 before they go down again. And that makes a lot of natural gas producers, drillers, transporters look pretty darn good. So that's an area where people might want to look as well.
We'll have more with Sean Brodrick right after the break.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Sean Brodrick. Back on the subject of electric vehicles, they only make up about 1% of the light vehicle fleet right now. Tesla, by the way, somebody just said their evaluation now is higher than General Motors, even though they've never got a product out on time ever.
I know. Their valuation is just crazy. And I actually know a guy who made a great deal of money shorting them before. Maybe he's going to short them again. We'll have to see how things go. I would not be long Tesla at this point, because of the tremendous run-up they've had, just since the beginning of the year. I mean, just a great, great move. But then, frankly, I look at the entire U.S. market, and I look at something that's been sliding lower since the beginning of March. You and I were having a conversation about how the Canadian market is doing better. That's primarily due to miners, probably, though I'm sure energy companies could have something to do with that. The U.S. market's looking tired. That's because President Trump came in on, he had like a three-legged platform, which is he would spend money to expand infrastructure, and he would do healthcare reform, and he would do tax cuts. But he's getting bogged down in the Washington swamp, and so the chances of him doing these things are just being pushed further and further out into the future. Tax reform is important, by the way, and it really helps smaller companies more than the larger companies, because the larger companies never pay regular tax rates anyway. They have the sneaky accountants that can get them tax cuts left, right, and sideways. It's the smaller companies that really need the tax cuts. So if those are delayed, like, say, into 2018, you could see a reckoning in the small caps. We'll see how that plays out. One thing on the gold miners to keep your eye on, and I was just talking to you about a chart that I'm going to be sending out to my Uncommon Wisdom Daily subscribers today in afternoon column, is that the grade of the gold, of the reserves of the big miners, is like falling a lot. According to the folks at Metals Focus, they're an analyst group. The grade of reserves is now 1.15 grams per metric ton, and that's a drop of 20% from the current mean process grade, that is the grade being produced now, of 1.44 grams per ton. And even 1.44 grams per ton is not a lot. So we are really seeing the grades fall, and so according to the analysts, this means that the big miners, the world's 50 largest gold miners, have a mine life of just over 11 years based on average mine life reserves remaining. And you and I know that it's going to take them 11 years to start up any new mine, you know. So what are they going to do? I think we're coming to put up or shut up time. We have seen some acquisitions in the gold mining space recently. Exeter is an example of one of those. I think we're probably going to see a lot more going forward, because they have to build up their reserves, and frankly, if they're smart, they will pay up for the higher grades, because that just helps you ride out any real, slump in the price of gold, which could still happen, and also covers up a lot of mistakes, because that bringing a mine online, things go wrong. Even for the best people, things go wrong. And so I think that some smaller cap miners could really do well. But that brings up something else that we should talk about. Well, you have heard about the problem with the small cap junior miner ETF, right?
Yes.
They have run out of things to buy within their purview of what they have. They just seem to be between a rock and a hard place. And now 8% of what the GDXJ owns is now the GDX. They've actually taken a big position in the big gold mining ETF, because they have run out of things that they think is worth for them to buy. And so they said they can't create more shares. And I think a lot of people that own the GDXJ are now thinking, you know what? There's a lot of companies they're ignoring. We should probably put our own indexes together, our own baskets of stocks that we think could do pretty well. There are some great junior miners that the GDXJ does not buy, and it really boggles my mind why they don't. I think they have to expand and just loosen their restrictions on what they can do. But then that screws them up, because they have to buy the GDX. Then you have a fund like JNUG, JNUG, which is that's the 3 times leveraged junior miner ETF here. What does it own? It owns GDXJ. So the triple leverage fund owns the GDXJ, which is the junior miner fund. The junior miner fund owns the big miner fund. There's really a lot of interweaving tentacles and just compactness in that industry right now that I think that if you have a small company with a good project, your time might be coming. The time when you can get people who really want to own that for all sorts of reasons. That time could be right around the corner. And I think that's why this portion of the industry is looking very, very good. Because if you have, say, a junior developer with a new project that's going to be coming online and will then start to look attractive to the Junior Gold Miners Fund, well, who's going to want to buy it? Of course the Junior Gold Miners Fund is going to want to buy that mine. Well, at least the stock of the company that owns that mine. And so there's some real potential here that I think investors have to look at. There is some stuff that could play out this summer and over the course of the year that could be tremendously rewarding for them.
We'll have more with Sean Brodrick right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Sean Brodrick. Sean, an interesting invention here in Canada. They've invented a mutual fund for for colored diamonds. Flawless colored diamonds. It's a minimum $500 buy-in, and apparently only 1 in 10,000 diamonds is colored, and they say the market for this is tremendous. It's also very risky.
Yeah, well, they would say that.
Yes,
I mean, it's the diamond industry that says that. I've heard for so long diamonds are the best investment, and I can tell you diamonds haven't been a great investment over the last 5 years. They could be now because of this fund, because this fund will take some of those diamonds off the market. Let me tell you what your best investment you have up in Canada is right now, my friend, and it's weed. We know that legalization is coming on like Canada Day, and people are actually purchasing the new marijuana fund, symbol WEED, W-E-E-D, on the TSX. They are purchasing it rather nicely because people are anticipating that coming. And so, there's obviously going to be a good market for this. It's obviously, something that'll probably have an expanding, it'll probably have an expanding customer base and like that kind of thing. Of course we can talk about how it's being overbought. We were just talking about Tesla. Many of these marijuana stocks are overbought, but they'll have pullbacks. When those pullbacks come, I am probably going to be a buyer because I think that that's an area where there's some real opportunities there. There are existing companies now. There'll be new ones created. And this is an area that, just like after Prohibition, everybody started playing with the liquor stocks. Now we're going to have the thing with the marijuana companies.
And it's Canada Day next year, not this year. So, folks.
Yes.
Yeah.
Oh, I'm sorry. I should have been clear about that.
Well, don't forget, in Vancouver, we're going to have the annual 420 celebration that they can't get legal permits for on the beach. Although, if you want to have a music festival, you have no problem getting liquor permits for that. So you're going to have, quote, another illegal gathering on Thursday where no one will be arrested unless they get into a car and try to drive impaired. That's what the police. That's what the police look for.
That is very polite of you and so Canadian.
But again, that's in Vancouver. In other cities, the police aren't so kind. Vancouver police have always had the attitude that they're peace officers, not law enforcement officers. Unless somebody is being hurt, they turn a blind eye to a lot of behavior. You know, well, it's easier than writing somebody up. There's a lot of paperwork when you arrest somebody.
Well, that is interesting to know that
police around the world could learn a lot
put off by too much paperwork.
Police around the world could learn a lesson there. It's not that you're not, you know, as long as people aren't hurting other people, why step in and get hurt yourself?
Right.
Sean, thank you so much for chatting with us.
Thanks so much.
Oh, and we should remind people that you can see Sean in person right here in Vancouver. Tell us a little bit about that.
Oh, yeah. Yes, that'll be in May 4th through the 7th. No, 5th through the 6th. And Mining and Metals Conference is going to be great. I can't wait. This is such an exciting time to do it, too. I mean, there are companies that have been beaten down for so long, they resemble pancakes, and you scoop them up, and man, we are going to be making some change on them. So I can't wait. It's going to be a lot of fun, and I can't wait to talk to people there. So definitely show for that, too.
Thanks again, Sean.
Thank you.
My guest has been Sean Brodrick, Natural Resource Analyst for Uncommon Wisdom. It's so hard to say. UncommonWisdomDaily.com. I'm Jim Goddard. If you have any questions for us or the show, you can email us at info@howstreet.com. That's so much easier to say. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.